What's happening, guys, and welcome back to another Monday night scan this week because of the holiday. I hope that everyone had a great, 3-day holiday and you're able to relax and unwind from some of this market action. We have a very special episode of Sunday Scan today. I'm going to walk through not only, what's been moving, what's on watch for next week, but I'm going to go through in detail, 3 or 4 setups that really I think can help people, and they're setups that I use all the time. We use in Investors Underground. And I think that that's going to be a really nice way to, help people to get prepared for the week ahead and to put some of these watches into context too, because when you have a setup that you're watching and you can really recognize the patterns and identify at least most of the key variables, it makes a big difference as opposed to just having things on watch. But, you need to be able to plug that into a setup that you're familiar with, that you're able to test and to put into practice. So make sure that you stick around because I'm going to go over some really effective setups that I use in my trading and that we use at Investors Underground. I will give the disclaimer now before I get into all these that I'm not a financial advisor and these are not going to be buy or sell recommendations. Everything that I'm going to talk about is for educational and informational purposes only. So before I get into the main watches and the reviews and the trade setups, Investors Underground is having their Labor Day sale. So you can save up to 70%, especially on course bundles and an annual membership, tied into that. So really, part of the value of being an Investors Underground and having a membership there is you get, all the market context. So you have people who are professional traders putting together their watch lists, putting together morning broadcasts, doing educational videos that they upload, every week. And so they're sharing not only what they traded, but how they traded it. They're dissecting the trades, which is super beneficial. And then we, of course, have all the technology where we're getting things like, filings the second that they come out. We're getting all kinds of alerts. We have AI news scrapers that are basically filtering in every type of news that's moving stocks into the chat. And then not only do you have it presented right in front of you, but then you also have professionals around you picking apart the news and can help you differentiate, what matters versus what doesn't really matter. So this is a great time. Some of these deals are better than Black Friday. So if you've been waiting to get into Investors Underground, and especially if you want to learn about the coursework, now is the best time that I've seen to really do that, because you can learn not only, the setups from Sunday Scan and some of the things that we talk about, but, in some of the courses you can get, 10 or 15 or 20 other, proven setups in great detail by professional traders. And that can really make a difference. And you only need a few setups to really be an effective trader. And different setups resonate with different traders. Some people are swing traders, day traders, trend traders, long bias, short bias, mean reversion, capitulation traders. There's so many different types. So really what it's about is recognizing that there's many, many ways to do well, in the markets. And you really just have to find something that resonates with you, something that has positive expected value, and then just, picking what works for you and then zoning in on that and spending a lot of time. And like our friend Pradeep always says, to really go deep on a topic. So if you're interested in courses, if you're interested in an IU membership, and if you're interested in learning, the most effective setups out there, it's no better time to get into IU and all of that than for the Labor Day sale. So that is running for the next couple of days, and we will link to that in the description. And then also I'll pin the top comment of that. So make sure that you check it out and then scroll through and really see, which bundle or which deal could be right for you. So I will get right into the charts. So the first thing that I want to go over is this BE chart. So this is an example of like a swing trade. So a pattern that I use is not only, for day trading or options trading, but I also do swing trading. And this is a beautiful example. This has been on watch for a while on Sunday Scan, but I'm going to kind of talk about what are the key elements that I look for when I'm doing a swing trade and, really trying to stack as many of the odds in my favor as I possibly can. So this is really where it went on my watch list right around here. And that was the day that they had news with Oracle. So for a little bit of context, BE is an AI power energy play, and they've been around for, a little while. And basically what happened is that they've been kind of stagnant for the last couple of years, trying to find their footing in the space. But once you had things like Oklo and SMR and all these things really, develop the AI power space and a theme around it. They were more nuclear, but this is fuel cell. But basically you have a theme that you're tapping into. So that theme existed. And then on this day here, that's when BE announced that they had an agreement with Oracle to basically provide AI power solutions using their fuel cell technology. So that is kind of like an episodic pivot moment right there. And you can see it's a large gap up that holds and closes near the highs. And then also it has massive volume associated with it. So that was kind of the beginning when it really got on my radar. And I think once it pushed through 30 or something like that, I had messaged Nate separately. I was like, this is very meaningful news, and this is going to be one on watch for me. So this is kind of an episodic pivot where it turns into a swing trade or a trend trade. So basically, when I see something like that, that has very positive news, it has the technicals with it, has the volume to confirm. Now you're looking to see, how well it holds. So if you're on like a day one of the news, you can definitely, put a position on here and then risk, basically where did it gap from, or somewhere around there, so you can risk $1 or $2. And then if you're right, over the next couple of months, if you have a more of a swing trade in mind, you can get $20 or $30 or $50 out of it. So you can get these massive reward to risk ratios on these types of setups. So not only do you want the news, but you want to see it holding well. How does it do on dips? Does it kind of soak back up and hold? And then not only that, so holding a steady trend, but then this has had a ton of bullish options flow associated with it. And so it's not like, bullish option flow or bearish option flow always causes a move. It's associated with it. So if you have a name like this and you want hedge funds to position in, if you want portfolio managers and everyone, they're going to do that in a number of ways, not just by buying the equity, but also by positioning with options and accounting for slippage and, doing some structured products around it. So it's always a good confluence of things to see when, you have very positive news that's like an episodic pivot. B, it's holding trend well, it's soaking those dips. And then you also have that bullish options flow associated with it. And then it's tapping into an already established theme. So AI has been one of the hottest sectors. And then you have the AI power theme, and you have things like GEV and OKLO and all these other names that have been trending with that. So this is what turned this into officially one of those AI power plays, and it helped it to trend with the sector. And then you see the continuous volume and the steady trends to this, and it's been holding these trend lines really well. So I think this will be one of those names that, over the course of the year, as long as the AI power sector holds up, because again, that's a big part of it, I think that this will be, $70 or $100 if it continues up. But again, that might be a target, but really what you're trying to do is get in with a good risk to reward ratio. And then as it's working, you can trim, you can re-add on dips and kind of work the position along there. And then around, larger dates, if there's negative news or something like that, you can always hedge with puts or things like that to protect a swing position. So that's one example of a setup and a pattern that I look for and that I use a lot. And so, there's other examples of, patterns that I like. So, for instance, we had a good mean reversion trade on Ethereum, and basically using this product, ETHA, which tracks it, or there's a number of products that also tracked it. But this is the mean reversion that we capitalized on maybe a week or two ago. And I'm going to go through that setup. And I think that will be valuable for some people as well. So, another type of setup that I like to look for is this mean reversion. So a mean reversion is basically, by definition, after something has deviated from the mean, after it's had a huge run up, eventually it usually reverts back to a more normalized trend line. Things don't tend to go parabolic forever. They always have, some kind of dip back to a broader trend line there. So what I look for is, you can see after a large move up, and I talk about this a lot, both on the intraday basis and on the intraday basis, when you have these stocks that are just stacking candles on top of candles, that is a sign that it's very, very tight. There's a supply demand imbalance, and basically there's not enough supply to go around. And that is what you're seeing, how, it can barely dip and it's holding those prior lows on whatever time frame that you're looking at. In this case, it happens to be a daily time frame. So after, Ethereum's going parabolic, the crypto sector is going parabolic, all the Ethereum names are going parabolic, and you have this clear sign that there's a supply demand imbalance. What I'm looking for is, maybe I'm trending this up on the way up as well, but what I'm looking for is a day where this supply demand imbalance breaks. I want to see a change of character. And you can see that by a lower high or a reject. And then that is basically putting it on my radar that I am anticipating a mean reversion trade coming up. Now I'm looking for this structure to break and for there to be a change of character. And so that candle right there, you can see it rejected and it was a lower high. And then you combine that with, okay, is the price of Ethereum actually, mirroring that? Was there any kind of news? And there was some news, there was a big crypto flush, and that caused a really nice mean reversion trade that you can prepare for there. So again, looking for something that has been going parabolic, you're looking for that supply demand imbalance, then you're looking for that structure to break. And then especially if you have a negative catalyst or something that not only did this structure after a parabolic run just break, but now you have something going in the opposite direction, that can be a massive opportunity for mean reversion trades, whether someone is using short positions or puts or anything like that. There's so many different ways to capitalize on these mean reversion trades. So that's another setup that I really like to use, and we see that in all types of markets and in all types of equities. So that's the second setup. Another setup that I really like is, so last week we talked about this THAR. So this was something that we compared to basically CEP in the past, right around here, where you had that big leg up, some consolidation, and then that next leg up. And then we also compared it to BMNR, where you had that big leg up, some consolidation, then that big next leg up. And that's exactly what we thought would happen with THAR. And we were watching it for that big leg up, that consolidation, and then that next leg up. And so when you see these patterns, these are trade setups that repeat again and again. And so it looks like magic from, the outside perspective of like, how can you predict these or do whatever? It's not about that. It's that there's structures in place in the market that repeat for the same types of reasons. And if you learn to identify those patterns, then you can really capitalize on them. So to break down this trade a little bit, you basically have that huge day up, usually on a low float name or a tightly held name, and you have massive volume associated with that. So that is like the first day or the first leg of that move. And then what tends to happen is that, it's on everyone's radar to short it. And so, it's up a ton, it's up a couple 100%. It goes on everyone's radar, but it holds, and it might hold for a couple of days and just kind of consolidate within there. And I'll actually pull up a more granular view of this so that you can really see what I'm talking about here. So this was that first leg up, and you can see massive move. This goes on everyone's radar. And then, over the next couple of days, you really have, here, let me just change this up for a second. Just so you can see the volume associated with it here. So big volume associated with that first move, very tightly held. And just like we saw with Ethereum over here, you can see those very tight, structures of that supply and demand imbalance. That's exactly what we're seeing over here, another supply demand imbalance. So that's that first leg up, very tight supply demand imbalance and massive volume associated with that. And then basically what everyone's expecting is that after a move this big, it should break down. It should fail. It should. So what happens is that if it spends the next couple of days just consolidating, all the shorts are still, adding in there, waiting for it to break down. But the problem is if it doesn't break down after maybe 1 or 2 days of consolidation and the volume starts to dry up a little bit, all the shorts are still in there. And then basically you can get up to what we call a trigger point, where if all the shorts have been adding here, around here, they might have an average somewhere in the mid fives, 550 or something like that. And so what I look for is if this structure holds and the company doesn't ruin it by doing an offering or something, if it holds, and then after a few days of consolidation, you have it creep up to a trigger point, that is where shorts start to get into, panic mode and say, this was supposed to break down, but it's not. And so what happens is that it again goes into that supply demand imbalance, just like here, and it has a secondary leg and it squeezes out all those shorts until it resets the tape again. And then you usually have another fade after something like that happens. We saw the exact same thing with something like BMNR, and we saw almost the exact same thing with CEP. So if again, look at that first leg, massive volume associated with it, and then a couple of days of consolidation, it holds up, the volume dries up, and now it gets to a trigger point, it triggers, and up here, and then you have that kind of same process again. But with the second leg, many times it's much more vulnerable to that actual flush that everyone was anticipating here, but it took, shorts getting blown out and longs getting a higher average before it was ready to really have that, flush down. So you can see very similar pattern with THAR, very similar pattern with CEP when that happened. It's almost the same thing, that first leg up, that consolidation, that secondary leg, and now it's ready for that, big mean reversion or that unwind. So that's another pattern. And then we can see even like things, I'll go over this a little bit more. on the main watches, but something like IPDN, very similar concept. Big first leg up here, and then some consolidation. And we'll see if this just round trips, then the setup is void. But if it just consolidates at that midpoint for a couple of days, the volume dries up, and then it gets back up to some kind of a trigger point, that can be a very similar thing. So that type of THAR setup is another one. And now I'm going to go through a little bit of a different one with this IPDM. So within with THAR, we were looking for that big leg up consolidation, then that secondary move, right? So there's a way to play this intraday too, especially on the long side. And so that's kind of what I'll dive into here. So when you have these names that are making that first leg, there's a way to trade that on the first leg, not just waiting for the leg to happen, then consolidation, and then that other setup. But this is a separate setup where if you have a couple of key elements, and again, let me just reset this so you can see the volume. Basically, what you're looking for is, take it into context. You have a stock that is usually a very low float stock, and it has massive, massive volume. And that ends up in what we call float rotation. And that is just the ratio of volume traded to the amount of float that's available. So this had almost 300 million volume traded on the day, and it has like a 2 or 3 million float. So it's rotating that float over and over again, up to 100 times through the course of that day. So when you see something like that, when it has high volume earlier on in the day and it's a low float, and maybe it's a crowded short because there's not a whole lot of gappers on that day, so every short is trying to basically get into the same name, that can result in a very crowded name. And what you get is these supply demand imbalances. So I did an educational video on this in Investors Underground. Again, that's one of the things that we do is we break down all these setups exactly like I'm doing right now. And we do that for members constantly. And then we're also walking through these names as we really, are in chat throughout the day, picking these things apart. So here is, again, a series of supply and demand imbalances. And what I always say is that for names like this that are very low float, that have the high float rotation, it looks like it's one squeeze, right? It looks like it's one, but it's really a chain reaction of multiple squeezes. There's a squeeze here, it resets, it squeezes here, it resets, squeezes here, resets. It's a chain reaction of squeezes together. And that is that first day move that we see on things like THAR and CEP and BMNR. It's all the same type of pattern where on that first day, they tend to mirror this type of action where it's very, very thin. And that's because that there's not a whole lot of bag holders in here, especially if it gaps up a ton. But it is short crowded. There is a lot of float rotation. And then basically you have these situations where it's very thin. Everyone's trying to nail it and every dip soaks. So a way that you can really play this on the long side is, first of all, identifying, is this a low float? Does it have the float rotation? And is it crowded on the short side? And if it has those elements to it, what you're looking for is when it goes down and it looks like it's going to break down, but it holds. And it does the same thing. You can, pinpoint this at various times throughout the day. And what you're looking for is on those dips that it looks like it should have broke down, but it didn't. That is a point where you can risk off of. So if it gets saved and starts to trend up, you can use that as a risk level for a long. So let's say if this was over, I don't know the exact levels, but say 280s or 275s or something like that off the open, and it starts to trend up, you could say, I recognize this pattern. So I'm going to get in at, maybe 290 or something like that, using that 275 or 280 mark as kind of my risk. And then as it works, you can maybe add to it to really, capitalize on it. So that is another pattern that really works. And then again, what changes some of this, from the front side of this first day move to more of the back side, it's you need to have longs up their average. And so it's not until you have some consolidation up here that you can really have, shorts get blown out. So it's not as short crowded, but it is more long crowded up here. And then once it starts to fail to follow through, which just means that this support here then turns into resistance and is rejecting and starting a new trend, then that is like an intraday way to play some of these first legs. But again, if you have 2 days of consolidation on something like this, then it can go back into the other setup of like THAR and some of those names. So that's another setup that we use. And hopefully this is making sense. Let me know in the comments if you guys have questions or what you think about this, style of breakdown of some of these setups. I'm hoping that it's useful to you. These are setups that we use all the time, and they're key elements to really, understand these setups well and how supply and demand come together and interact. Another setup that I'll go over is this CRWV. So this was one that I had call options on, kind of going into the NVIDIA earnings day. And so I'm just going to talk through a little bit of the, let me reset this again. CRWV. Okay, so this was the setup going into NVIDIA's earnings. And so this was the thought process behind it. So after this massive unwind in CRWV, they had lockups basically coming undone. So a bunch of supply was hitting the market. And that's what's been happening over the last, a couple of weeks, especially from this leg. So basically you had it, very washed out, very, a ton of longs are shaken out of this. And it has a ton of short interest, maybe 20%, 25%, especially for a name of this size. That's very significant. That lets me know that after a big washout of longs, it's also short crowded. So now you have a catalyst coming up where you have NVIDIA earnings. So basically, NVIDIA and CoreWeave are very closely related. And things, if NVIDIA's business is going well and they're pumping up CoreWeave, then that could be a positive catalyst. So identifying a structure where longs are washed out, it's kind of short positioned, and you have a potential positive catalyst coming on, that's when it goes on my radar for, okay, this could potentially have a large move up. And so how do you participate in something like that? You can either try, using the equity and having this as like a base as a risk, and then, going into earnings, you can manage it in real time with equity. Or what I like to do with some of these is if I'm anticipating a potential big move up, I will try to trade call options on it beforehand and try to make the position free, or at least, keep a partial. So just using, round numbers. If someone had, let's say 10 contracts of something or 100 contracts or whatever it is, if you had 10 contracts for a particular, call strike, and you were anticipating this could have a big move, hopefully what you're trying to do is capture some of that anticipation riding up. And so if you can make, sell 5 of those call contracts and then, have the rest of your position free, or even if you can only get, a 30% bump up and then you sell 7 of those call contracts. And so that way you're only holding 3. So basically you're just trying to get a free position so that if this works, then you could get a double, triple, 5X, 10X. But if it doesn't, then you're basically just back to flat what you were on the original idea. So that's what I like to do. Try to get into these, have a call position that you can reduce risk on, and then you can ride it through that NVIDIA earnings event if that is your bias on it. And that ended up working out. I got at least I think maybe 100%, 150% on the position from doing that. So that's another effective strategy of kind of identifying a bearish structure that's short crowded with an upcoming positive catalyst. And I call these like powder keg setups, where it's like, you have a drum of gunpowder or some kind of powder, and then you're just waiting for someone to throw a match on it and for it to kind of, blow up. So this is kind of like it's positioned to potentially have a big move. That's like that barrel of powder. And then if you have that match, which is the positive catalyst from NVIDIA earnings, that can kind of set it off. And so that's another type of setup where you're anticipating a big move. You try to make your positions free or reduce risk before it if you're using options, or if you're using equity, you can be much more hands-on and have a set risk level or add into a winner if it's working. So this went from maybe 95 or something to 106 or 107 or something after the earnings. So those are just a couple of setups that I really want to talk about and break down. And then we have a lot of others. So again, if you like setups like this, check out the Labor Day sale. And we have all of those courses where you have not only, setups like these, but you have maybe 10 or 15 other setups, from swings to intraday to short setups to long setups, all these different things that, really can make a difference in your trading. And it's just about finding what setups have proven edge, what makes sense to you, and then what resonates, and then, going after that and refining it and going deep on that concept. So I will get into some of my main watches for the upcoming week. Again, I gave the disclaimer earlier, so I won't go over that again, but here are the main watches. So we had an interesting situation with MDB. So this kind of reignited the software sector. And so what had been happening is that in the software sector, you basically had a big conversation of, was AI going to really kill a lot of these software names? And so it really took until some of these names had earnings to prove that, no, this is actually helping our business versus this is actually hurting our business. There's always going to be a few names that are being hurt by it, a few names that are being helped by it, but things like MDB or like, the sales as a software kind of businesses, some of these are being helped. And so that big earnings day, again, closing near the highs, big volume associated with it, like we saw with BE. when we reviewed that setup before. Basically, that is a sign that there's a lot of new demand coming in. So they had good earnings, good guidance. They, moved everything up, and so that is a sign that a new sector trade might be emerging. And so you had also names like Snow do the exact same thing, where big ramp up, held pretty close to the highs, and then had that big volume associated with it. So I'm watching the software sector and a couple names like this for really some continuation if you have those winners with the AI. And so how do you participate in something like this? You're usually after that initial move up, you're looking to see where did the dips hold, and after some consolidation, you'll have a level to risk off of for either an equity trade or an options trade if you're into that as well. So that's one thing that I have on watch for the week ahead. Another thing I have on watch is this Hood. So basically, this has been a name that's been, I almost compare it to like a Palantir, one of the biggest momentum names of this last current cycle, where every fund is long, everything has been going pretty well, but now you're starting to get this consolidation. So it's not exactly the same, but you remember when I talked about the setup with, let's go over like BMNR. And I'm not saying that this is going to be anywhere near as extreme. We'll use CEP as an example. After you have these big, move ups, you're basically waiting for. Let me pull up this one. After you have these big move ups, you're basically waiting for the average cost of longs to get high enough that if it starts to fail to follow through, it can really unwind. So again, this is not a small cap. This has real, fundamentals behind it and everything like that. But it's the same concept where after a big run, you get some consolidation and you have longs slowly getting more and more their average cost higher. So what happens is that down here, it's thin along the way because, no one's underwater on it. But if you have a big consolidation and it starts to potentially break down, you have a ton of longs with an average probably around 100 or, in the 90s around here. So what happens if it starts to break under 100? What happens if it starts to break under, 95 or 90? Is that you get all these longs that are price sensitive can start to stop out, and that can create a lot of supply. While at the same time, you might have more shorts coming in, some funds, reevaluating it, especially if the sector and the cycle is changing with some of the crypto stuff. So this would be a name possibly on watch for some unwind. Again, you can't force these setups. This is more understanding that I think that the supply-demand structure of this has changed. And if it starts to prove that and fail to follow through and break down, I think you could get a very nice unwind, similar to what we saw in something like PLTR recently. So that is the name I have on watch for the upcoming week if it starts to act weak. But again, with this name, I feel like this has been a conversation that's happened a million times over the last 3 months. But you have to watch out for those S&P ad headlines, because if this gets added, maybe I'll have a big spike on that. But if not, again, I think it can fail to follow through. Another sector I'm watching is this. So like IREN. This is kind of like the crypto mining / AI hosting services sector. So this has actually had some relative strength compared to some of the other names in the crypto sector, like MSTR, which has had massive relative weakness due to some factors that we've discussed before, where they're basically selling upside calls or diluting or doing preferred shares, basically killing all the upside on the stock for the crypto run. And now people are starting to recognize that. And as soon as crypto pulls in a little bit, this takes it down hard with it. So asymmetric reward to risk there. Basically, it moves down further on flushes than it moves up on rips. So that's a good comparison. So that sector will be on watch for continuation, unless you have the crypto sector really fall apart, which I don't totally anticipate, but I think that we're in some consolidation now. So that's something to watch out for. And so again, with something like MSTR, relative weakness. So you're basically looking for what are the areas that you can risk against if you're either short or if you're using put options. And then for names with relative strength, you're looking for things that are holding trend well. And then, you can see if they're on watch for continuation from up there. I'll recap NVIDIA earnings a little bit. Solid earnings, everything was in line, but a couple of things kind of poked out. And that was that some of the companies in China, like Alibaba and some of the other ones, they're developing their own chips. And you remember the DeepSeek scare months ago. You could have some of those fears creeping back in that if China, or if some of these other countries or companies don't necessarily need as much demand from NVIDIA, then there could be a little bit of a mean reversion. So the thesis is still intact. And this is not really on watch for an online, but it's just something to be aware of if that narrative change, really starts to impact some of the price action. And then if you do want to play something like that, a lot of times it's looking for relative weakness in the space. So something like AMAT could be an example of relative weakness where you have this potential bear flag forming and then breaking down there. So it's another name on watch. Baba had earnings, and then this was again a positive catalyst. Kind of like this was a big transition for Baba from kind of the e-commerce business, which was pretty stagnant for its case. So like that part of the business is not doing fantastic. It's really just kind of flatlined. But you had a narrative change where it's now more focused on its basically cloud services, AI stuff. So that's kind of taking the excitement now. And so as long as that is in place, then that can drive Baba higher. But and then you can also see that with some names like Baidu, which is also involved with some AI stuff as well and some chips. So like that sector is doing well in China. But then you have things like PDD, if they're more just traditionally e-commerce names or like the cheap crap products that we all know and love in the US, especially with some of the rules on the de minimis tax treatment of some of these or the tariff treatments, then you could have some of these names be a little bit weaker. And you see that not only with PDD, which, is of course a cheap Chinese, item producer, but also you have names like DLTR, which imports a lot of those, and DG is kind of the same thing. So you can see when that de minimis news came out, and then plus you had some earnings, but those are some names that are on watch for some potential downside. So those are really the things that I wanted to cover on Scan today. And again, hopefully it was helpful. We went through, 3, 4, 5 different setups that are actionable and that we talk about all the time in Investors Underground. And then not only do we talk about them and the setup, but then in real time, we are discussing how can you trade these, when I'm entering, when I'm exiting, the whole trade thesis around things like that. So that's a big reason to be a part of the Investors Underground community, because you have professional traders who do this for a living. And you also have prop traders and all these other people that are, have their own businesses, but they still use Investors Underground because they can get that type of information there and it helps to give them more of an edge. So if you're interested in that, definitely check out the Labor Day sale. Again, up to 70% off on a bunch of courses and the membership. So these are in some cases better than our Black Friday pricing. So if you've been waiting for a time to try it, it makes the decision easy for you. So if you want to trade at a professional level, you help yourself by surrounding yourself with other professional traders and the best technology and course material and educational products and watch lists and all that stuff. So definitely check out Investors Underground if you're interested in that. Like, share, subscribe, share this with another trader friend if you thought it was helpful to you, and then leave a comment. What do you want to see on Sunday Scan? Do you want more of this type of content? Do you want more setups? Do you want more watches? What guests do you want on? And just let me know and we will make it happen for you. So good luck in the week ahead, and I hope that everyone trades them well. Take care. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.